Welcome to the weekly technical analysis review for Monday, July the 1st. I'm Rafi Barajan at XM.com, and this week we're going to be looking at the dollar versus the yen, the US dollar versus the Canadian dollar, and the Aussie yen. Let's start first with the dollar-yen pair. We can see it's looking fairly bullish in the short term. Stochastics are pointing outwards and nearing overbought levels. The MACD, on the other hand, although the histogram is above its red signal line, it's got some way to go before reaching positive territory, and that also can be shown in the price action as well, which is still way below the 50-day moving average. Though prices did manage to break above the 20-day moving average, the nearest resistance, if the positive momentum continues, is the 61.8% Fibonacci retracement of the uplift from 106.45 to 112.39, so that's around 108.72, but we would really need to see a climb above the 50-day moving average and the 50% Fibonacci at around 109.42 in order to see a more sustained increase in dollar-yen, and then if we see a break above the 110 level near the 38.2% Fibonacci, that would help shift the current bearish picture in the medium term to a more neutral one. Let's now turn to dollar CAD. We can see it's rather bearish in the short term. The RSI is flat just above the oversold level. We can see prices have been touching the lower Bollinger Band over the past week or so. There is a little bit of positive momentum today, but if we do see further declines, we can see price action is not too far away from the lower Bollinger Band, which is at the moment around 1.3044. So that's the nearest support, and then not too far below is the 261.8% Fibonacci extension of the uplift from 1.3357 to 1.3564. So that's around 1.3021. If we were to see a break below 1.3021, the next support to have in mind is the 1.29 handle, which has been a key support area in the past, and then that would also reinforce we would rather reinforce the downtrend and could help shift the current medium-term picture, which is fast turning from bullish to neutral. Then we would see that turning decisively bearish if that trend continues. In order to ease the current downside pressure on dollar CAD, we would need to see a climb towards the 138.2% Fibonacci extension at 1.3277, which is near the 200-day moving average and the middle Bollinger Band as well. And then in order to help restore the bullish picture, we would need to see a climb at least as high as 1.3380, which is where the 50-day moving average currently lies. Let's now turn to the Aussie yen pair, our final pair for today. Looking at the RSI indicator, we can see that it's clearly comfortably in positive territory, though it has started to flatline, meaning that prices are starting to lose the upside momentum, and we can see why, because there is strong resistance coming from the 50-day moving average at around just about the 76 handle. So if that resistance holds, we could see prices heading back down again, with immediate support coming from the 23.6% Fibonacci retracement of the downlink from 80.70 to 73.92. So that level is around 75.52. Further down, we've got another important support at the 75 handle, which is at the crossroads of the Tenkan Sen and the Kijun Sen lines. And then breaking that, we could see Aussie yen heading back towards the 5.5 month low of 73.92 we saw earlier in June. And that would also reinforce that downtrend, which started back in April. To the upside, if we do see a clear break above the 50-day moving average, prices would then head into the Ichimoku cloud and help shift the the bearish picture to somewhat more neutral one, especially if prices were to climb as high as the 50% Fibonacci at 77.31. So that's it from me. Thank you much for watching and have a great day.